All right, so let's begin. So we're gonna talk a little on mergers and acquisitions, what's happening from in an internet perspective. We're gonna look at the trades, and also this is something that we talked about in our last week meeting. Look at 5G as an investment opportunity. So we'll take into that. Quick disclaimer, as always, this is just for education, your own education, my education. We are here to learn from each other, and this is not an investment or financial advice. So don't trade based on what you see here. Yeah. All right, with that, let's start with first our macro view. Even though on Friday, the markets went down, especially around the tech side, but overall, if you really look at the week to week performance has been strong across all indices. SPY, Dow Jones, QQQ, they all ended up higher. Dow Jones was much better than SPY, but the best performer for the week was IWM, small and medium business segment. It caught up, behind their peers. So last week we saw that IWM was lagging, but this week IWM has started to catch up. It is still way down and has a lot more to catch up for, with SPY or with SPY specifically. But good to see small businesses, coming back up. TLT, which is the bonds, almost unchanged, 0.38%. And the gold is up 3%. Which is GLD is what is the closest you can get to gold without trading in physical bullion. And VIX, I was surprised to see that VIX closing at 22.21, which is like 15, almost 16% down for the week. With a lot of things that have happened in market and a lot of things that have not happened, which should happen, I was expecting VIX to actually rise. And I think in intraday, on some days it has gone all the way up to 26, 28, but net, it ended up in 22, less than 23. Probably this may be the lowest that we have seen VIX since March. That's my guess. I don't think I recall VIX going, lower than 23 in recent weeks. So looks like everything seems to be good. There's no fear in the market. That's what at least the indices are telling us. Question from Shannon: how do we get on Slack to view recordings? Shannon, I'll talk about this thing a little later. I know not everyone is on Slack, and I'm working on something so that I can provide access to the recordings. Slack you can get on, because Slack, I share the document. I'll share the document today. So the information on Slack is available on the meetup. If you look at the meetup invite, below it says join our Slack community. Just click on it and you will be in. I hope that answers the question, Shannon. It's on the meetup. On our meetup group, we have a link for Slack. Year-to-date performance, this time no quiz. The top performer has been gold. GLD is up 32.5%. Gold hasn't done much for almost a decade, but this year, this has been the top performer in terms of broad market indices. The next one up is a QQQ, which is almost up 25.5%. Then we can talk about the next one is TLT. So the top three, this is no different. I mean, if you can see it, that this top three have been gold, bonds, and the tech sector for almost, I think this is, I probably cut it off for last 3 months. These have been the top performers. This is S&P. S&P is back in green. It's up 3% year to date. And I think it is down maybe around 3% from its all-time high. And the laggards are Dow Jones Index and IWM. So they still have a lot of catch up to do. Generally, I've seen that IWM or the Russell Index is harbinger of how the economy gonna do. So if the economy starts to open up, I would expect IWM to catch up on to with S&P 500. So that's at an overall how the major indices have been doing year to date. Definitely, I'm surprised to see gold and the TLT being the top two, out of top three. Nobody would have thought that the bonds, which is generally termed as not exciting, no growth, would do so well. Okay, quick question from Vinu. Even the metals, yes, we talked about gold. If you want to look at, silver has even done, I think, better than gold. It came down a bit on Friday, but I think it is either at par or better than gold. But I look at GLD because that's what I generally focus on and trade on. Even though I have a position in silver, but GLD is the one which I generally will look at as, if from hedging perspective. They were down last week overall. Silver, I don't know, I didn't check silver, but gold has been up almost 3%. It opened the week, GLD opened the week at 185 and closed at 190.81. So it was up for the week. Open up any opportunities in VIX. So when you're trying to look at a VIX, you really need to know what you want to do. I use VIX for hedging the portfolio. So yes, I did bought a call spread in VIX for November position. I generally want to have positions in VIX going out almost 3 months. And I will cover that when we talk about risk management in our option bootcamp series, in terms of what are the things that you can do to hedge your portfolio against risk. The most common, which generally people do, but that doesn't work long time, but people do it because it's easy to do. Financial advisors tell them to do because it's limited risk, is buy put. In one of our earlier sessions, we reviewed the whole study over multiple years. And there are not just one, there are multiple studies which shows buying put doesn't work long term. So I use VIX for as a portfolio hedge. So I did buy a call spread in VIX. VIX is one area where I would actually buy call or call spread. And about Morgan Stanley Chief of Tom is facing major upward move for growth coming for Friday. Yeah, I mean, talking heads can project and can say whatever they want to. And frankly, it could go up or down depending on what's happening in Washington. I would take this information just as information and be ready to play and stay engaged in markets in both ways. So if I would have, if we would have been sitting out because markets went down in March, we would have lost on all the growth that we have seen. If we now go all in thinking Morgan Stanley or someone is projecting that it's going to be, super high growth, who know where the market may turn out. So I want to stay hedged, stay engaged, but make sure don't go too big in either direction. So that's Anupama, that's how I play. Yeah, market pundits, my perspective is pundits can forecast, but then it's just their forecast. we really don't know how the market might work out. Nobody expected this V-shaped recovery. So we don't know whether it still continue to go or is it going to move sideways or what's going to happen. All right, let's get into some of the big stories for the last week. Any other questions, do let me know. Otherwise, I'll jump into major market awareness section. First one, uh, unless you have been living in a cave under a rock, you wouldn't have missed this. That Microsoft is, continue to discuss on potentially buying TikTok. I won't go into the details of why, they have to do it. I'll probably talk about when I talk about the world internet. But net, they got a 45 days to enter a deal to buy TikTok's American operation from TikTok's parent ByteDance of China. So that's one big news in the market from a mergers and acquisitions perspective. But I also saw a lot of other mergers and acquisitions which probably might have flown under the radar and were outshone by Microsoft and TikTok. We still have to see how this deal materializes. Unfortunately, owners of TikTok don't have much choice here. So I don't know how much of a bargaining power will they have in terms of negotiating the deal. They're in a tight spot. White House administration is, ban them. Either we ban you or you give your American operations to an American company. Is it a good deal for Microsoft? I don't know. My personal perspective is Microsoft is more business oriented. They haven't had great success in any of the consumer facing application. So I don't know how will they be able to integrate TikTok and be able to ride the success that TikTok has seen over the last 3 years. So Google probably could have a better suitor for this one. But we'll see how it turns out to be. I think the Skype, except LinkedIn, I don't think there's any other big acquisition that Microsoft has done and that have worked out really well from. And I'm talking about an acquisition in a consumer space. Again, LinkedIn is also kind of a business. It's not really, consumer to consumer. It's again a business to consumer. Skype was one, which was a messaging platform to be used by everyday users. We don't talk about Skype anymore. So I don't know how well Microsoft be able to integrate and still make some profits out of it. How can Trump saying Treasury should get a piece of Microsoft TikTok? Yeah, I mean, POTUS can say what he wants to, but this is an unprecedented, and I don't think this will happen because no one, after the initial statement from the president, no one else has given any thought to it. I don't think that's even a part of discussion or negotiation between Microsoft and TikTok. Our leaders say a lot of things in jest, so that's exactly what would have happened. But I would be scared if that becomes a reality. Now, think about it. Government should act as a facilitator and not as a paid broker. If Treasury wants a piece of it, tomorrow every other government department, not just in US, but across the world, would say, we want to approve this merger, you got to pay us money. I mean, I see it a plain simple kickback for facilitating a deal. Every big merger in any country has to be approved by the regulators. And even this Microsoft and TikTok will have to be approved by Chinese regulators. I don't know whether even that will happen or not. So what if every other regulator or government in the world says, you want to do a deal or we want to, we want to cut out of it? That's just a form of, I mean, I'll say it, plainly, it's like a corrupt practice. So government should act as an enabler and should not demand a cut. That's my personal opinion. I don't know what's why administration behind it. Merger, merger tax. You may call it tax or whatever. I call it a kickback for getting the deal done. All right, so let's move on. Other acquisition. Google bought 6.6% stake in ADT. This is again another Google's attempt to get into homes of people. They are, and I understand why Google is trying this hard, because they kind of feel that they lost that battle to Amazon. Amazon has got Alexa, Amazon got Echo, Amazon bought Ring. So it's all over. And the next battle would be a battle for home connectivity once, this whole IoT and 5G starts happening. So Google wants in. They do have a Nest, which they bought a few years ago. But I think now with ADT, they want to get their entry into home security system. And this could very well expand to other services, but I think over a long term, this may work out well for Google. And if you were ADT shareholders before this announcement was done, congratulations. I think ADT jumped up 65% or so when this merger was announced. Not the merger, but when Google's stake in ADT was announced. Sachin says, TikTok wants 50 billion, Microsoft offering 32 billion. Hopefully settle somewhere in between. Yeah, we'll see where it happens. And I don't remember the exact figure, but when this announcement was done, Microsoft shares jumped higher, and I think their market cap, I don't know what the exact figure was, maybe around 20 billion, 30 billion, it increased by that much amount. So kind of they already, it'll become a free deal for them, because this is going to be an all stock deal, I guess. I don't think they're going to do a cash deal. I'm not privy to what the discussions are, but if the stock stays where it, where it jumped after the announcement, Microsoft doesn't have to pay anything out of their pocket. Bigger things may happen if W starts forcing Zoom and other. Okay, so here's one thing I want to clarify, and this is I've seen in my other groups also. Zoom is not a Chinese company. Zoom is San Jose company. It's an American company. Just that the owner is ethnicity is Chinese, that doesn't make Chinese company. I open a company tomorrow, it can be called as an Indian company. It's going to be an American company opened by American citizens. So let's be clear, Zoom is not a Chinese company. Though, like many other companies, they do have a big development center in China. That's different from saying it's a Chinese company. If we ban Zoom, it's a San Jose who's going to lose the revenue that they would have earned from Zoom. I don't want that to happen. I want US and San Jose to continue earn revenue from these companies so that they can fix some potholes in front of my house. So Sachin, yeah, Zoom is not a Chinese company, the net, that's all I want to say. But I do see a lot of rhetoric around Zoom. People saying Zoom is Chinese company, we should ban them. Unfortunately, it is not a Chinese company. It's a US based company, San Jose based company. All right, one more merger. This week was a merger theme. Apple made a quiet move into payment space. Apple have been trying hard to get into payment space. They have Apple Pay. I don't know how successful is it. I haven't used it much. I own an iPhone, but I have never paid using Apple's iPay. But let's see. Anyway, Apple made a move and they acquired MobiWave. It's a small company which helps in what MobiWay will do is it can turn the iPhones into payment terminals. So they have a technology which can just make your regular iPhone into payment terminals without additional of any, hardware, etc. So the current iPhone, a few million, billions iPhone that are around the world can immediately be turned into as a payment terminals. So that's a big deal for Apple. They want to become a big player in payment space. And as we all know, digital payments have been growing. PayPal, Square in US have been growing leaps and bounds. And all the big players, Google wants a piece of it, Apple wants a piece of it. So they've been trying hard to get into this space. Why not? Apple should just buy Square or someone. May not be the best thing for Square shareholders, but I think Apple has got a balance sheet strong enough to buy any big player. So this again, one acquisition that flew under the radar. Apple acquiring MobiWave. Next one I want to talk about is Atlassian. Atlassian acquired Mindville. So we haven't talked about Atlassian, I think, in our session. So quick intro to Atlassian. The ticker symbol is TEAM, T-E-A-M. Atlassian is a household name in software industry. They started their journey by providing a cloud-based, SaaS-based bug tracking system. If you are testing a software, you found an issue in a software, you can log a bug, or what Atlassian says as Jira. So that's how they started their journey, by providing Jira, which I guess most of the software companies, a lot of software companies, they use it. They offer these services on cloud as well as something that you can install in your own data center. But that's how they started with, and slowly they've been expanding into different areas. They acquired HipChat. No, I think they had a HipChat. Slack got HipChat from them. They moved into chat, and now they're moving into asset tracking. They're also bought and created a project management software. So apart from just being a Jira or a bug tracking system, they want to expand their foothold. So recently they acquired an asset management company called Mindville. So what Mindville provides is a way for especially the IT departments to track where their physical assets are. We briefly touched upon this one when we did a deep dive into ServiceNow, in terms of how ServiceNow provides all those different functionalities over the cloud. So lo and behold, that market is huge. ServiceNow is the leader. And say that, is what the risk ServiceNow runs into is companies like Zendesk, Atlassian, trying to move, expand their role from just being a player focused on one particular functional area and trying to expand into other functional areas. Zendesk is IT ticketing. They may try to expand into others. Atlassian was software bug tracking. They've already got, a lot of other companies they acquired. They acquired Code Barrel. They acquired OptionGig, which helps them do incident management. They acquired Help, which is for ticketing management. And now they also acquired Mindville, which is for asset tracking. So this is a very exciting space. And that's why, after we looked at ServiceNow, I'm excited about this space. And good to see, a lot more companies trying to do what ServiceNow has done. Okay. All right, no further questions. Let's move on. The next one I want to talk about is Teladoc acquiring Livongo Health. Not sure how many of you have heard of Teladoc or own Teladoc. Maybe quickly let me know in the chat how many of you own Teladoc. Say yes, no. Some feelers. All right, I got one yes. Okay. Own and sold too early. Yeah, and that happens that multiple times, and it has happened to me, not in Teladoc, but on other shares. I can't even count it on my hands that I owned it, took profits early, sold it, and never got back in. Ramesh says own Livango and for nothing. Bought after went down, it went down further. That's okay. If you're buying it, depends on what's your time horizon for buying it is. When I'm looking at a company in which I want to do a deep dive, my outlook is generally 5 to 10 years. So I don't care if it has gone down recently. T-Doc, I've sold put spread. Cool. All right. So let's talk about, a little bit about this merger and the reaction to the stock after this announcement was done. Right. Little surprising because that's not how we generally see how market reacts to a merger and acquisition news. So Teladoc decided to basically acquire Livongo, and they say it's a merger, but once the merger is completed, the majority stakeholder will be Teladoc, while Livongo will hold a minority stake. It's not 50-50, and it is not 70-30. It's somewhere between. I forgot the number, but it's a huge. It's, I think, the third biggest deal for this year. So for those who are not aware of Teladoc and Livongo, let me quickly provide some background. So Teladoc, they are mostly known for providing services in which patients and doctors can interact remotely. Tell a doc, telephone a doctor. I'm assuming that's probably might have been the genesis for their name. I don't know. The whole idea is that you don't have to go to hospital if all you want is just to talk to your doctor. You can talk to your doctor remotely over a web conference, and that's how the Teladoc started. Okay. Now, this market has got a lot of competitors also, and Teladoc have been growing, and they have also acquired a lot of other companies. Now, Livongo, on the other hand, provide medical devices. Like, I think they are most famous for diabetes uh, checking medical instruments, and those are all connected devices. Means that if you are a diabetic patient and you are taking your readings, those are immediately transferred to your healthcare professional. So with COVID striking, there was a huge tailwind that we have seen in Teladoc as well as Livongo. No one wants to go to hospital. I mean, even if I'm sick, I won't want to go to hospital because I'm afraid hospitals are all swamped, and they're all burdened by patients who have contracted COVID, and I don't want to be in that place. So there's a huge tailwinds that both Teladoc and Livongo enjoyed, and that showed up in how well their stock have done this year. Then Livongo was up maybe around 400%, if I remember correctly. Maybe we can quickly look at it. Anyone can remind me what's Livongo's ticker is? I own Teladoc, so that's I know. TDOC. Let's look at a Teladoc. So Teladoc, I think at a March they hit 145. They went all the way to 253. Now let's come back to 195. Livongo says LVGO. LVGO. Boy, look at Livongo. So this is see if this is. So let me put their year to date. All right, so look at the ride that they've enjoyed from April. Yeah, so they have been it's been a tremendous year for Livongo shareholders. They started 2020 at almost $24, went all the way up to $150. Great performance. So they enjoyed a lot of that tailwinds. And now they decided to merge. And like I said, this is the third largest deal for a US company behind 7-Eleven purchase of Speedway gas stations and Analog Devices Maxim integrated. First thing to note, it was a stock plus cash deal. It's not all cash deal, not all stock deal. I think for each Livongo share that you own, you will get 0.6, the exact number 0.59, some third, fourth decimal shares of Teladoc. And you get around $11 some cents in cash. Bigger thing is that it will expand Teladoc's scope beyond just a medium connecting doctors and patients. So as a Teladoc shareholder, and so I am actually still an owner of Teladoc. I got into it around 2 or 3 years ago when it was in 60s. And because I've been selling covered calls on it and the options on it, I wasn't too afraid that it might go down. I said, I'll continue to reduce my cost basis. So I held on to it. But investors didn't like it. Why? Number one is, I think there was a question on what's the trade-off deal between them. So I hope, Ramesh, that answers the question that how it's going to be stock and cash deal. I'm not sure if that's exactly what we were asking for. So do let me know what you mean by the trade-off or why they want to acquire each other. We're going to talk about it. So Teladoc used shares to acquire. That's why investors didn't like it. It means they will have to offer more shares, almost 50 or 60% more. So that will result in share dilution. As a shareholder, nobody likes their share to be diluted. Unless, we can see a huge growth potential with this acquisition. So Teladoc is not, new to acquiring companies. They have acquired a few other companies. In total, I think they have acquired 12 companies. We'll talk about some of them. We'll look at some of them later. But they know how to acquire and grow and derive synergies out of it. But the bigger fear, which I think happened for both Teladoc and Livongo, is what is that their management is seeing what market has not seen. I can understand that Teladoc want to expand and they want to acquire Livongo, but while Livongo didn't, negotiate, many of times in most of the acquisition, I would see the acquirer will go low after the announcement has been done because, hey, they paid too much. There are concerns around how well will they be able to integrate their acquisition into the company, the synergies that they think will accrue out of this merger, will it really happen or not? So an acquirer going down after merger announcement, not a new thing. But the target company going down, that's something which I see, rarely. And that happened with Livongo. Not that it was down by a few pennies. It's down a lot. So what is that? What spooked markets around this deal? So first thing is markets started thinking, does Teladoc fears that after the COVID is done, there are no more growth levers, organic growth levers left for Teladoc? Could that be something which markets haven't figured out, but Teladoc management is thinking about? And that's why they want to use their shares, which were already pumped up because of the tailwinds due to COVID. And they're trying to buy out, another company so that this high flyer company, this company which has been growing leaps and bounds, having that company on your balance sheet, on your P&L statement will ensure that you, Teladoc, as an overall company, can still show growth. Right? So there are ways for companies to grow. I like companies that grow organically, but then you can grow only to a certain extent organically. Some part of a time, every company is looking to grow through acquisitions as well. The problem or the red flags which I see, and that doesn't apply to this acquisition, but generally I want to talk about, is if a company is growing only and solely through acquisitions, that's a red flag for me. There needs to be an organic growth, and I look for a companies that if they are acquiring something, they are acquiring the company which offer complementary services. In my opinion, I think Livongo does offer a complementary services. It's so the core of Teladoc is connecting doctors and patients remotely, and there's a huge opportunity which exists in this space, in telemedicine space. Right? They started with web conferencing. They started. They have a contract with insurance. They're just trying to reduce the overall cost of healthcare. Livongo, which offers devices which connects doctors and patients, is not too far away from their core mission. So I would not say that this is an acquisition which would divert their attention from their core mission. This is something which is complementary. Right? And they did a smart thing by using the pumped up price to buy out Livongo. So now with the share going down, they kind of got it even at a cheaper price. If you're a Livongo shareholders, probably you're not happy, but as a Teladoc management, I think they did the smart thing. At least they didn't do the dumb thing of doing share buyback at a high price, which I see many companies doing. All right, concerns from Livongo investors. Generally, companies would sell themselves out when they see that the future is uncertain. Not at a point of strength. Right? As we have seen, Livongo's share price, and the share price is backed by the amount of growth in the revenues that they have shown quarter after quarter. So from a business fundamentals perspective, they have been doing really good. And generally, the companies acquisitions, they agree to be acquired at this valuation, which is not a huge premium, only if they are in a position of weakness, where they could see that there's not other way around, there's may not be much growth coming forward, might get also acquired so that we can still survive and continue to do what we plan to do. So that's what generally companies do. So that when Livongo management agreed to be acquired by Teladoc at the price point at which the deal was announced, that suddenly spooked market, saying, what did they miss out in the growth story of Livongo? Is the strength that they have exhibited till today, is that a fake strength? What does Livongo management know that investors have missed out? Why did they agree to sell off at this valuation? It means the management knows something which is not as rosy as what the investors thought and put their faith in the stock price. So that's why I think Livongo also got beaten down after this merger announcement. The other concerns which we have seen in many acquisitions is a high flying company, a small growing company, when get acquired by a bigger corporation, lose a lot of their growth. They just languish being another department or another subsidiary of a huge big corporation. So other concern is, once it's a part of a Teladoc, would it continue to grow at the pace at which they have been growing it? Or will the growth slow down? Will it just languish in the much bigger empire of Teladoc? So I think those were my reasons that why both Teladoc and Livongo, they both went down after when this acquisition was announced. My thoughts on this one, I think on a long-term perspective, for Teladoc, it's the right thing to do. There are a lot of challenges in terms of just the web conferencing or the connecting doctors and patient area. So they have to expand, and I think that's the right move to do. Will the stock market, yes, could the stock go down? I mean, why the stock has gone down? Maybe the valuations that they have recently seen, they got ahead of themselves. But if you are looking a long-term view, I still am bullish on this. I'm not going to sell the stocks that I own, but I'll continue to hold my positions and maybe do covered calls to reduce the cost basis. But I am still long-term bullish on Teladoc. I talked about some of the Teladoc executions, like they acquired InTouch, Best Doctors, Advanced Medical, Teledietitian, BetterHelp, Medicine Direct. So they are not, this is not a new area for acquiring a company that operates in a healthcare system and expand their offerings to their customers. All right. Now, Anupam says, maybe Teladoc getting access to patient database Livongo, plus they can come up with economic plans. Oh yeah, I think that's definitely because I think there is only 25% patients overlap between Livongo and Teladoc. So that's why I say this is a complementary acquisition. It is not that they're acquiring, another full one-on-one competitor. It is in that case, they wouldn't have been able to expand the overall market in which they operate. But by acquiring Livongo, Teladoc has basically expanded the whole market in which now they can operate. They have now got a super-sized pizza. The pizza is much bigger for them now. And even if they can get a smaller slice of that pizza, overall, I think it'll still be good for them. So that's only 25% overlap between Teladoc and Livongo. So yes, they will be able to grow their customer base a lot more. It is just sell the news for both. Yeah, chart was parabolic. Again, chart was driven by COVID. They both enjoyed the tailwinds coming from COVID. Was it sell the news? I generally put buy the rumor and sell the news. So I don't know if market had thought that Teladoc will acquire some company, and that's why they were pumping it up. So I don't know if it is sell the news or not, but definitely the chart was parabolic. And at some point of a time, we have to, we should be ready for pullbacks in any of these stocks that have gone parabolic in last few months. Not just Teladoc. A lot of other stocks have seen parabolic movements, largely driven by work from home um, situation. So at some point of a time, you cannot sustain the same growth that those companies have sustained in the last few months. Right? Once the economy starts to open up, the normalcy starts to return. I'm sure we may not be spending as much time on Zoom or consuming as much online content that we are doing right now. So some of those things will come back. It could be a reason that Teladoc and Livongo were both too high, valuation got ahead of them, and that just a repricing of the valuation possible. Sumit says, I would love to get back, and it's coming down. You can get a 3% selling 170 puts on Teladoc 30 days out. Yeah, I mean, if you want to get in, sell a put, Sumit, like you mentioned, you could get a 3%. And if you want to do defined risk, maybe sell a put spread. I don't know how, what exactly might be happening in next 2 or 3 months on Teladoc and Livongo. Could it go down? Sure. How far it go down? Nobody knows. Or could it go back up? For sure. So we don't know where this stock's gonna go. So we'll just have to make sure we are ready. We are protecting ourselves by giving ourselves some, buffer in case stock goes against our outlook. All right, next one. I want to talk about the new IPO because we did review S1 in one of our earlier sessions. So now they are trading. So Rocket Companies, which is behind the brand name Rocket Mortgage, eventually debuted on NYSE under the ticket RKT. So they started trading on New York Stock Exchange on Thursday, 6th of August. So when we reviewed the S1 for this, that time they haven't announced what's the price range that they were looking for. But then later on, we heard in the market that the price range that they were looking for was $20 to $22. As they got closer and closer to IPO, they realized that there's the demand from institutional investors, big private investors, wasn't that great as what those investment bankers had anticipated. So they reduced their IPO range from 20 to 22 to 18 to 20. So IPO process have been more rocky for them than going as a rocket. So they decreased the price and eventually they listed at $18 on Thursday. I think for first few hours. And I know there was a lot of a chatter on this one because since we had reviewed the S1 in detail, we had a little more insight into what this company is about, what the business is, what are the risks, etc. And we wanted to see, how this company does. So I think eventually they did close higher. They got almost 20% pop the first day. I think now it is around 23. It's a good deal for those shareholders who probably got in at 18. But I think it's got a lot more potential. Now, the reason I want to talk about right here is why market did not value them higher. Where was the gap? When the investment bankers started to peddle the shares to their big institutional investors, they were looking at a price range of 20 to 22. Maybe rocket companies and investment bankers have to do a better job in terms of positioning this company. They clearly were not able to position this as a financial technology platform, which, by the way, they actually kind of are. Agreed that they are a mortgage service provider, But the USP that they have is what they have done with the Rocket Mortgage. Anyone who have gone through the mortgage process can swear that it's a painful process. It's a long run process. You have to sign hundreds of pages and it's too much of a paper back and forth. What I like about Rocket is the Rocket Mortgage platform, wherein they have been able to create and do this whole process of approval, origination, escrow, everything online. And that's the reason why uh, millennials are attracted towards Rocket Mortgage. Not that they provide the best rates, but that the process is really smooth. 75% of revenue that they get is from millennials, first time home buyers. Okay. Now, probably that story wasn't highlighted, or probably didn't jive well with the investors, especially the big institutional investors. And they look this company as you're a mortgage service provider. So as a mortgage service provider, what do? You basically service loans. You originate a loan. Once the loan is done, you sell the loan to Fannie Mae, Freddie Mac, Ginnie, whatever, those government agencies. And then you just get paid. Excuse me. Then you just get paid for for ensuring and giving platform for those borrowers to pay their mortgage, and you just collect the service fee. So I think that's if you view it as just a servicer, you would think, where's the growth? We are just collecting a transaction fee on every service, or whatever, however the service fees are calculated. But the idea is we are just providing a service, and you're not a technology platform, right? So that could have been a reason why they had to reduce the stock price. But then that got me thinking, if that is the case, is it that Street has missed seeing something? Because I also thought of another company that went IPO recently, and I was trying to compare that with Rocket. The company was Lemonade. Lemonade is an insurance company. They have a great app, mostly loved by millennials. On you can buy insurance using Lemonade app. And all I recall is when Lemonade IPO'd, I think their stock went gangbusters. I didn't invest in it. I am not invested in it. I don't know what happened. Yeah, so it went from 49 to 96, now back to 66. What Lemonade does is exactly what Rocket Mortgage does. They don't own insurance. They don't hold insurance on their books. They are kind of a middleman. You buy insurance, they will immediately sell it to reinsurers or other companies who will actually own the insurance risk on their books. Lemonade just collects a premium and pass it on. And I'm like, if market was so bullish about Lemonade and continue to stay bullish about Lemonade, why not Rocket Mortgage? I would be little scared if they hold all the mortgages on their books, because then they own the risk of mortgage default. So anyway, so for me, it was like, did the Street people misread this? Because they do provide a nice platform. They have built a good ecosystem. So anyway, because I'd spent time on reviewing S1 and I was kind of bullish on it, I did A thing which I have not done in last 10 years is to buy a stock on an IPO day. I don't think in my trading history in US I have ever done it. So this was my first one. And I do recall someone asking me, should we enter into that? I mean, when we reviewed S1, my answer was, I don't buy stocks on IPO days. So I'll wait and watch. But just because a lot of things happened that they had to decrease the price, I was like, what are they missing? And I actually picked up, at an IPO. So I learn every day. So, and some opinions that I hold really strong. I am humble enough to say, maybe I was wrong. Sometimes should be able to buy at an IPO if I have a strong conviction towards it. And this is the first stock I ever bought in IPO. Yeah, Rocket Mortgage 45 billion, Lemonade is just 2 billion, but Rocket Mortgage is also operating in a market which is huge. And they are the top mortgage lender in the country. All right, next one, movies. Again, we continue to see this theme around what's happening in the movie scene. We discussed, I think few weeks ago when Universal released Trolls 2 or 3. I've never watched any of that movie. But I did read that news from investing perspective when they released directly to streaming platform. AMC came out saying, we're going to ban Universal Studios from our movie theaters. How could they release the movie onto streaming platform? What happened to theaters? It's always being released through theaters. Anyway, Universal did that. And later on, now Disney had announced that they're going to release Mulan on Disney Plus. So we talked about clearly the writing is on the wall that the traditional way of movie release is not going to be there anymore. Whether AMC, Cinemark, you like it or not, things have changed. COVID has accelerated some of those things anyway. So you ban Universal, now Disney's there to stream Mulan on Disney Plus. So I think management of AMC realized that. They patched up. Says, all right, let's get back to our friends at Universal, and they shortened the theatrical window to 17 days. We talked about last week. So Universal AMC patched up. Now any movie that is being released in theaters could be on streaming platform in just 17 days, as against 70 days. I think it is 70 or 72 days was used to be the norm earlier. And then Disney announced Mulan on Disney Plus for just $30. I will watch Disney Mulan for the whole family, $30. It's a no-brainer. You don't pay, a per butt charges over for watching movies anymore. So in my opinion, I think these actions from Universal, Disney, who have changed how the movies would be released in future. Even after the COVID is gone, even after the life has returned back to what it used to be, those were the days. I miss those. But I think from a movie perspective, once these studios get a taste of the margins that they can get through streaming, they're not gonna give those margins back. So we should see a lot more movies and the way in which movies are being released changing in future. Any thoughts? Any one of you still, let's say if we open up theaters and the movies are being screened, are you still comfortable in going to movies in near future, even if the vaccination is available? just let me thought. I don't feel comfortable. I don't feel comfortable in going in any place which is crowded, and definitely not in a place which is enclosed, which is what the movie is. A game will stream in theaters and movie at home. Yeah, movies, theaters will have to figure out other ways of revenue. The theaters may not be called movie theaters anymore. They would probably just remain as a theaters, and they may have to figure out how else can they earn, you know, basically generate revenue. Next year, okay, Bahubali movie. Yeah, if you really looking at the movies where you want to definitely see it on a big screen, yes, I agree. And you want to see it on a Dolby sound system, yes, unless you have your own personal theater or a big screen at home. Maybe that's one reason why you'd go to movie. Yeah, but I don't think, at least for whole of 2021, I'm gonna take kids to movie. Yeah, movie experience, popcorns and people. And that's where they used to make a lot of money. There's a huge margin in those concession stands. Unfortunately, movie theaters can't earn those margins anymore. All right, next topic I want to talk about is the world internet that we're planning to build. Especially, I was surprised at this. I was surprised at the ban on TikTok. Now we are seeing not just a ban on a few apps. First it was TikTok, then it's WeChat. But now I think kind of we are looking at a world in which we will not have one common internet. It's like a intranet of individual countries, whoever can afford to be. It's like a group which are not connected with each other. That wasn't how internet was conceived when we started it. But looking at what um, Mr. Mike Pompeo had to say, it looks like we, as the US is planning on an initiative to just create and separate our internet infrastructure from China. So a quick note on an initiative called Clean Network. So it's not just apps, but it has got a lot of other things in it. So overall, clean network initiative by administration means we need to have a clean carriers. Means within US, we should not allow the carriers that we don't trust to connect, or we should not have equipments from those companies into our telecom infrastructure. Target, Huawei. Clean apps. We don't want apps which share data with the governments that we don't like. It's a different matter that we will have access to all the data. That's a different stuff. But we don't want to have apps which will share the data with other government. Clean store. So it could be a directive to the app stores like Google Play Store, App Store from Apple, not to host those untrusted Chinese apps. Clean cloud. US citizens' data should not be hosted on any cloud infrastructure that we do not have complete faith in. We do not trust that cloud infrastructure. Target, Alibaba, Kingsoft, and other cloud companies in China. So clean cable. Undersea cable, that is basically the whole piping or the plumbing behind this internet, need to be protected. The tapping points, etc., on those internet cables, you have to make sure that no one, especially the countries that we don't trust, can't tap onto those undersea cables. clean path. I don't know what exactly that was. Just my guess. Is it like safeguarding sea routes and the road ones, the real physical path? But again, there has to be something which is, protect this or that from Chinese excursion. So net, administration is announcing the whole clean initiative under the guise or under the requirement of protecting data of US citizens and keeping US infrastructure safe. I don't know how feasible it is. And I don't know if this is even the right thing to do. Deepak, maybe the clean air is an initiative of US government. No, this was announced by White House. We can see Mr. Pompeo right here. So it is an initiative of US government. I don't know if I have a link to this, but this is initiative of US government. A company like Amazon have commented to provide global service through satellite like 5G. Yes, so once the satellite comes in, we'll have to again see clean skies. So I think we'll add one more clean sky. How do we protect and make sure that our satellite are not interfered by Chinese ones? So one thing which at least I'm a little concerned about this is the whole idea behind this is to shut China out or Chinese companies out. I don't know what is the administration planning to do and trying to achieve. Is it just a way to divert attention of US citizens from the real problems and bring up this as an issue just for political gains? I don't know. We are not here to discuss politics anyway, but something that I am little concerned about is we will, by doing all this, we might just accelerate. This whole protection might serve as an accelerant to a lot more innovation coming from Chinese companies, for which we are already scared of. We shut Huawei down. We shut them out. We told, US companies not to have their apps available on Huawei phones. Huawei is building their own app store. And what's not, if US may not want to use these services, etc., but the rest of the world still may. Could those become much bigger than the US companies that we're trying to protect? Who knows? So that's the one concern I have, is if we are actually forcing those Chinese companies to become a lot more innovative by kind of shutting them down. It's like, if you pay me money, I'll sit here and do nothing. But if you shut my resources down, I will become a lot more resourceful, and in a long term will become a lot more powerful. And I don't know if that's what we want Chinese companies to be. So just my perception. You shut these things down, we are just accelerating on lot more growth of China-based companies, because now customers may not be able to access some of the US the services of US companies. They build their own. That's what I am a little scared, but we'll see how this go on. It might hurt Apple sales. Yeah, there will have to be some retaliation from Chinese government. We still have to see. This is just an initiative they announced. Nothing have been, I think, except those executive order on banning TikTok and WeChat. Nothing else have been done. So, but I do see there will be repercussions. We and US companies, some companies like GM ha- generate lot more revenue from China than what they generate from US. So because of this globalization, the revenue mix has become so convoluted. It is very difficult for us to say if we ban, let's say China, or if China bans us, who's going to get hurt more, right? So we'll see how this move forward. Sachin says strategic decoupling of interdependence between the two economies. Yeah, but for what? I mean, we could still be US only economy, and China could stay as a China only economy. We could do we can have the decoupling, but I think if that the whole idea is that it would strengthen US and may weaken China, I don't know if that objective could be achieved with this or not. Apple has opened manufacturing units in India, and yeah, China already blocked FB, Google, YouTube. Yes. So I'm not saying that this is unprecedented. China does not allow any of those companies because they want, being the government being what is, they want us to share all the data, and which Google, or to filter the search results, etc., which Google, Twitter, for all the right reasons, decided not to. So that's why they are banned. All right, let's move on. I think I put it in a Slack channel that the tech went down on Friday. I did a little shopping. So first thing is Fastly. I have had my eyes on this because this was growing so fast. But then it is a CDN company, content delivery network. So I just could not buy anything at the valuation earlier. But now with valuation coming back to a little decent level, I did initiate positions in Fastly. So little shopping. Last Friday, I also shopped Illumina. This was just a few stock. I had some stock. I just added to this position because this almost fell 15-20%. And I know this is a big player in the genetic testing. Right now, all those tests are on hold, but those will come back up. So I initiated, picked some more on Illumina. Okay, Anupam says to maybe open China's it's definitely changed UK's decision on Huawei. Yeah, we will need all. I think this whole segregating and creating different networks will not be feasible if we don't have a cooperation from all our allies. So if the rest of the world, especially in the developed world, does not follow what we're planning to do here, then this may not turn out to be such a good thing for us. Last thing, stalemate in Capitol Hill. I thought on a Friday we should get something out, but net, nothing came out. Still left and right were deciding who's going to be right in the end. So net, there was no agreement reached on the stimulus package. So I think the Democratic Party, they are looking for 3 billion or 3.5 billion. Republican Party is looking at 1 billion. We haven't yet seen an agreement on any number, or even for that matter, why that money should be used. So I thought that the market would react negatively on Friday. Overall market would react negatively that we haven't reached a deal yet between the two parties, but market was mostly unfazed. Market is like, I don't care what's happening on Capitol Hill. I'll just do my own things. The reason is, I think, and this again, I think market probably, and the market has got a lot of hints anyway, saying whether we go through the right process. If not, then there is an option of executive order. Mr. Jerome Powell has already told that Fed will be there to act as a backstop, unlimited. So fine, you agree on a deal or not. There may be other ways we can get this stuff done. We could have executive order 180th, whatever that number is, and Fed is there for us. So markets was largely unchanged on Friday. We'll see eventually what happens. Will they agree? Will we get a deal or not? All right, Sachin said biggest SOX. Yeah, I think that's exactly what I'm saying. Either via bill or an executive order, they've already priced in that some stimulus package will be coming in. All right, so that brings us to the end of a market segment. Now we will review some of the trades. I'll take a quick break to sip some water. Meanwhile, any questions? Great question. Why do you tend to not buy at IPOs? The reason is, earlier I never had had reviewed S1 of a company to figure. So when I say I don't buy at IPO, means I don't just found, okay, Lemonade had gone IPO, share is going up, let's jump into it. Right. I would buy an IPO if I had seen and reviewed S1, or if I got enough information around the company. Now, when a company is going IPO, we don't have much information available in terms of what's really is happening in the company. So I generally want to give some time for company to prove themselves out before I get in. If I only believe and think that those investment bankers have got best interest of my best interest in their mind, that's not true. So investment bankers would peddle the price, whatever maximum that they can extract from the market. Even if I know about a company, I don't know at an IPO price how much pumped is it. So that's why I generally don't buy anything at IPO. Did I miss Lemonade? Sure. Did I miss big commerce? Of course. But then, I didn't touch Uber. I didn't touch Lyft. WeWork, they were pushing in the market at a market cap of $40 billion. WeWork actually had done some study, not their S1, but I've been following WeWork. And it always amazed me that how can a company who has entered into long-term obligations and short-term revenue streams can ever make a good business model. And it always, I was surprised that WeWork was being valued. But investment bankers were peddling that company at $40 billion. Eventually, when market rejected it, they themselves were not willing to buy it at even $8 billion. But so that's why, as an individual investors, we don't have enough information. We don't know nothing about company. And I'm skeptical of whatever pricing investment bankers put up front to buy it an IPO. Rocket Mortgage, I actually did to spend a lot of time on reviewing their S1. And again, from a pricing perspective, when I looked at the market was not valuing it, and then was trying to compare with how it happened on some others, I said maybe I'll initiate a small position. Again, it's a small position to begin with. At what price will you get in TikTok or Livongo? If you are looking for 5 to 10 years, every day is the right price to get in. And again, because you never know. Could it go further 5% down, 10% down? Sure. So if my time horizon is 10 years, then for me, every day could be a right price. But if I'm really looking for a short term, I want as a trading opportunity, then you might have to look whatever technicals you follow, Des. You want to look when it goes out of the lower Bollinger Band, or maybe you want to look when it has the RSI shows that it is oversold. At that, you can pick up whatever indicator you want to. But what I rather do is to see if the stock has fallen down like it has now, but if the long-term growth story, I feel that it is still intact, I'll probably sell a put or a put spread, giving myself a little more buffer, because there's no way, and I haven't been successful in pinning a particular stock price and then say, okay, I'll buy it there, and whether stock will go down or there, I don't know. So the beauty of options is that you can still be wrong and still come out profitably. So then we don't have to be always right. And that's why I don't look at, should I wait, or whenever I feel that, okay, it's got a good IV, I think probably it has fallen down a little bit, I might initiate a position in it. Or if I were to buy a share, then I would, I won't put everything in at a one price point. So if I were to invest, $100, maybe right now I will just put $20 in it and wait. Again, the fact is, if you're looking for a long term, if it goes down, you can pick more. If it goes up, you can again add more. So from a long term perspective, really won't matter much if you are pick at a different price points. So that's what I did with Illumina. Illumina went down, and Illumina, I don't have an option. I want to pick some shares of this. I added a little bit to my kitty. Or did I do a big trade? Of course not. Because I don't know if it could fall down further. But the long-term growth story on Illumina, I still believe in it. They are one of the top players. So I'm like, okay, I will do little shopping. It's available on discount, maybe not from a fundamental analysis discount, but it has. I had my eyes on it, but now it has come down. I'll take a bite. Thoughts on Warren Buffett investment in Bank of America? I actually did not analyze that one, but Warren, knowing what Mr. Buffett does, he wants steady, straight income stream in great companies that are available at fair price. Warren Buffett doesn't pick up fair companies at a great price. So he'll pick up the great companies at a fair price. Financials have been the laggards in this last few months of rally that we have seen. Financials haven't done much just because the interest rates are zero. So, but the companies like Bank of America and JP Morgan, Goldman Sachs, etc., would they be around and will ride the wind when it blows in their favor? For sure. I've been bullish on both Bank of America and JP Morgan, and have been doing basically bullish trades on both of them. And those have worked out good. Not as great as, Fastly would have done, but I know financials have not performed. So they how the tech has performed till now, or S&P has performed, after the COVID. I am kind of a short on tech as well as S&P, but I am long on financials. Yeah, BOFA I have not looked at, but JP. All I know is these top banks, JP Morgan, BOFA. They're probably not going to go anywhere. Especially bullish on JP Morgan has got a good trading desk, so they enjoy a lot of revenue from that also. But from a consumer banking perspective, Bank of America is a strong bank. Again, I haven't looked into the results, etc. But that's my premise. So only two banks, individual banks, where I have bullish positions are JP Morgan and Bank of America. Oh, sorry, the third one is Goldman Sachs. Otherwise, I have XLF. WFC. WFC, unless the management fix what the issue that they have had. And I think the new CEO, Charlie Schraff, is doing all the right things. But is it a buy at this stage? I think starter position is okay. That's my education opinion. If you don't hold WFC and you want to start a position, but I remember WFC is one of the very pure play consumer banking. They don't have any much of a revenue from a trading desk. So if the interest rates continue to stay where they are, and if the COVID situation does not improve, they may still face challenges. Number two on WFC is there's a cap that Fed has put on WFC in terms of how much can they grow. They are not allowed to grow big because of what the shenanigans that they had done earlier. So they got a growth cap. Only thing, the only way to remove that cap, and I think maybe because of COVID that was relaxed a bit for some time, but they got a cap unless they improve their operations and can demonstrate to Fed that now they become a good kid. Until they become a good kid, they won't be allowed to grow. So I am not too bullish on WFC right now. They have to clean up their house. They have to demonstrate that why they should not be capped anymore. So they've got a lot of restrictions from Fed on Wells Fargo. Has disinvested in WFC. We don't know if the latest one 13F filings, we have to see, but he did hold a sizable stake and he never said any word about it. He was questioned multiple times around why still holding WFC, but again, he looks at 40 years, 30 years, what's going to happen down the line. Lemonade and Fastly. Okay, so maybe we could, yeah. All right, we'll put it on our radar. When you say surprisingly Buffett doing buyback, how much of a buyback have they announced? I didn't dig into Berkshire results. I think probably they announced results just now, today or yesterday. I don't recall. So that'll be interesting to see on what Berkshire has done. But they did buy back some of their stock earlier. Maybe they bought back more. Oh, 50 billion. Okay, as a shareholder, that makes me happy. It's a shareholder friendly gesture from Warren Buffett. All right, so let's get into trades. 5 billion. That's a big difference between 50 and 5. Okay, I'm not happy, not ecstatic anymore. All right. Cool. Shall we jump into the trades? All right, let's do that. So from our previous sessions, GDXJ has been glittering for us. We closed the August trade, rinse and repeat. I think this is the third or fourth trade on GDXJ that we've been doing. So I closed August trade at profit last week, and I opened the September one. So overall, we collected a premium of 684, even though the initial one was 552. We made an adjustment without adding any capital, increased the premium to 684, finally closed it. Next one, Tesla. Again, we closed it. It came into profit target within 12 days, which was too sooner than I would expect. But, I'll take my gains and take the risk off the table. So this was the trade that we had discussed when we initially put in we did an in-depth discussion on what's the risk is, what's the reward is, and do it only if you are willing to buy the Tesla at 900 and you have capital available in your account to hold this position. Otherwise, I would not suggest doing this. But we closed it, and then I opened another one for September. We'll talk about that later in the section. Silver, that's been bane for me. I only started, getting onto silver because I was seeing some actions earlier. I did a few trades which were profitable. So, but I had no idea that silver would do what it had done. I think it hasn't done. We haven't seen such moves in silver in decades. So my positions, those were being challenged. And I talked about last week saying they haven't yet hit the risk point. So I was still holding them, but I think it was on Wednesday or something where it's the loss that I was looking at was at a level where I said, I don't want the loss to grow further than this. So I took some losses, closed some of the trade so that if silver goes further higher, my loss is still limited to what I can afford to lose. So, but if silver comes back in, this could turn out to be a profitable trade. Didn't really work out well, but you don't win, all the trades anyway. But if you don't go too big, I don't know how many of you attended the boot camp this Wednesday. First thing I talked about was position sizing. Example like these, I always remember, okay, thank God my position sizing is within control. If I'd become a lot more greedy on silver and I pumped in a lot more money, even though the silver have stayed just range bound for years, just last 2 months, that position would have killed me if I'd gone too big. And I cannot control how the markets would behave. Let's look at a silver, what moves silver did. Look at this. I think I initiated my positions starting here. Because if you do look at it, it's been always range bound. Of course, COVID impacted. After that, it started staying range bound. And I made money here. I started making money here. And I was doing the same thing. The moves that silver had shown, I think it's almost like up 60, 70%. Haven't seen it in decades. Now, these things don't happen. These are called things like a black swan. The only way to protect is, don't go too big on position sizing. So I'm still around to trade on silver. Did we take some loss? For sure. We don't win every trade. But the losses are not big enough because we had a definitely position sized. Okay, can you explain to call sold when you don't own Tesla, please? Yes, I will. When I talked about the Tesla September trade, I'll talk in details of that trade, what I did. GLD, gold, all that glitters. in the market is gold or silver. I don't want to say silver. That's right now my sore point or whatever. Gold has been good for us. I hold gold in my retirement portfolio, and I was using the options to kind of do a call spread to reduce the cost basis. And even if I lose on options, overall I'll still gain. So same thing on gold. Look at the moves. That's one area where I won't stop talking about is position sizing. That's where I see many, option traders just getting killed. Look at the moves gold has made from 165 to 194 in what, 14 trading days. It's up 15% in 14 trading days, 1% per day. Gold doesn't do these moves. Okay. But anyway, so I'm happy that it made the moves because it means my long position has gained. I had 3 trades in it. This was an iron butterfly, means risk is limited. I know already what's the maximum risk in this account trade is. This was again an iron butterfly. I know what the maximum risk in this trade is. This was a kind of I say nowadays I've started calling it cross account covered call. So things that you would have heard is covered call. There is another variation of covered call, which is called poor man's covered call. Now I've started my own variation called cross account covered call. Means I will sell a call in option trade where I am owning the stock in either retirement or my long stock account. It's a cross account. So this was, I sold 175 call when the stock was around 165. I'm like, gold doesn't move that much. Stock is at 165. I own it in my long portfolio anyway. If it goes high, my long portfolio will benefit. So I sold and boom. That's why I don't like picking directions. So I'm losing on this option trade? Sure. Am I losing on overall portfolio across all these trades and my long positions? No, I'm still profitable. So not much worried about GLD. Home Depot, HD, I'm still holding it. Let's look at Home Depot. Home Depot, again, this was started. It's many times we say good problem to have kind of a trade. I bought Home Depot at 225. This was my buy price. I sold a call at 235 long back on July 2nd. And after that, stock has just started going up. So I did a defensive trade. Net, the current August position is I have a call, which is a covered call, and I have a short put. And overall, I have taken close to $19 of premium in this. So if it gets called away, fine. Net, my sale price would be 235 plus 19, close to 254. Even though this call is at 235, I collected $19 of premium by doing adjustments. I'll be able to sell at 254. It's okay. 225, bought at 225, getting out at 254. But the other thing is I'm still bullish on Home Depot. So from a September perspective, I already opened a bullish position. So if it stays where it is, August will get called away. This will probably hit our profit target and we'll close it. Okay, next one, Paycom. Okay, it's some question. More margin selling puts to get around 12x revenue. Okay. Good analysis, Sumit. I have not looked at their earnings or the synergies. I haven't got into those details yet. But thank you for sharing all that. I like that. All right, Paycom. I'm still holding, it's a defined risk position, still holding it, making some money, not exactly, the profits that I would like to, for it to make before I close it. So we'll hold it and see. If it comes down, our risk is defined. I probably may close this at loss and maybe pick up some stock at a lower price. Long term, I'm bullish on this one. We did a deep dive on this. So I now had a little more information than just, hey, there's a ticker which is going high. Now I know a little more about this company. Lulu, rinse and repeat trade. We've done Lulu. I think this is the third trade. Again, we sold. So I think there was a question around Tesla. Tesla have exactly similar trade. In Lulu, I sold a put at which I'm willing to acquire Lulu, which is at $300. And then I sold a call spread so that I can get a little more premium. Overall premium we got is $7.30. Means if I were to buy Lulu, my cost basis would be $293, which I'm okay to buy Lulu at $293. Their acquisition of Mirror, they're also expanding their footprint beyond just yoga pants. And Lulu is where right now it is 342. It is making decent amount of money. This is one stock where I thought I could close it because this has hit my profit target. But like we talked in a boot camp, sometimes you have to look beyond the stock and look at what it is doing for your overall portfolio. So if I just look at this stock, just three, I would close. I'm like, it's kind of very close to hitting my profit target. Let's close it. But what's doing to my overall portfolio is that it is giving me little bearish exposure. Means if market goes down and Lulu goes down, this stock may be I have a chance to make little more money. Not that it falls, the bottom falls out of the market. In that case, my hedges and my negative delta trades on Apple and SPY would work much better. But if market, let's say, retracts a few percentage points, Lulu comes back to 320, 310, I'll probably end up closing it as much higher profit level. So overall portfolio perspective, holding this trade makes sense. It provides us some hedge and a potential to make more money on this individual trade. That's why I'm still holding it, even if it is now close to hitting my my profit target on an individual trade. If I become blind to my overall portfolio, just look at this, I will close it first thing in the Monday, but I'll hold it for now just because it's helping the overall portfolio. That's sometimes you have to look at what stock is doing to portfolio, because eventually that's all I want to protect. I don't want that one stock makes a lot of money whereas it has hampered our overall portfolio. It's a team. We don't want one person winning. I want the whole portfolio to win. So if losing on this or making less on this, or Lulu going down helps the portfolio, I'll hold it. All right, next one is ServiceNow. Again, bullish on this one. I am still holding it. It is making some money, but I'll still hold it. Now, one thing which I might do, this is a naked trade right now. I don't have any protection. If I see that, I feel that there may be a lot more turmoil in market, I might go and buy a put to, not from a protection purpose, but just to conserve the buying power. But for now, I don't need it. So I'll, let it play with the naked put position. At some point of time, if I want to conserve my buying power, in that case, I might convert it to a spread. Do let me know if you have any questions on any of these trades. These are the ones that we had reviewed it earlier. So let me ask one thing. Do you think this section is helpful? I mean, I don't have to repeat it because I already know these trades. So there is no additional knowledge or anything that I am able to enhance by going through this. I just want to make sure you get an idea or the thought process of why I'm closing it, why I'm holding it. Okay. All right, cool. Yeah. Even if you have not traded this, I think might help you in how you can frame your trades or the decision making process that you may want to go through when you are framing your own trades. Okay. Neo, I had sold, I had did a covered call trade on Neo. And then I've started to have a seller remorse. I'm like, I am long-term bullish. Why the heck I sold a call on it? So I want to increase my delta or my bullish exposure to Neo. So I didn't add Neo here. Okay, so I added a short put position, right? Bullish means either you buy stock or you can open up a put position. So I already had Neo in my portfolio, for which I had sold a call at 5.5 and 6 because at that time Neo was trading at $4. You know, who knew what Neo might do here, right? I kind of sold those calls here. And if you really look at a Neo for last, from here, I think I've been selling covered call on Leo from when it was around $6 all through 2019 March all the way till 2020 May, April, June. And I've been continuously doing that. So I'm like, okay, here I sold a covered call. It was a $4, sold at 5.50. And then another tranche, I sold it at $6. Lo and behold, I had no idea what Neo would do. And so I had 400 shares. I did 2 covered calls, did 2 more covered calls. Okay. Now I know these shares will be called away. And I was like, I still want to retain my bullish exposure. So I bought 500 shares and sold higher call at 14. Little did I know that it will go all the way up to, 15, 16. Then I was like, I think I want to retain the shares. So I sold a put to increase delta. Now the net position is I have a stocks. I expect by August, I will have 500 stocks and 1 strangle. If Neo stays between 8.5, sorry, let me just put it right. If Neo falls lower than 12 and I have to buy the shares, my cost basis will be $8.71. If it goes and stays higher than 14 by September 18 and my 500 shares get called away, okay, I didn't sell it at 14. I would have, my net sale would be $17.30, which is decent enough for a stock that I bought at $7. So that's my play. If it stays between these two, I will close it. That will help me in reducing the cost basis of Neo further down. That's my play on Leo. How do they determine the equity needed for naked puts? So that determines in terms of what's the option trading level you have. If the only level you have is level 1 or 2, I think where you are allowed to do only cash secured put, then you need to hold the full amount of money available. For example, Chris, if you want to sell a put on Neo, which is trading at $13, for 1 contract, you need to have $1,300. If you have a margin account, which means you need to have a minimum $25,000 in your option trading account. Then they offer the margin account. And if you have a level 3 option where you're allowed to sell naked put, and this level numbers could change but depending on who the broker is, then you will get what's called a margin account. A regular margin account is called Reg T margin account. In that case, if you are selling Neo, put on Neo at 13, depending on broker, you may have to they will only hold back, let's say 25 to 30% of the money, which is 30, 25 or 30% of 1300 is, let's say $400. $400 will be blocked from your account to do sell a put one put on Neo. Third thing is what Sumit is saying is if a portfolio margin account, that is different than regular margin account, which if you've just started trading, you probably won't get. That you need minimum 3 years of option trading experience and you have to pass a test. So if you have a portfolio margin account, then you probably, only 15% is being blocked, 1/6. So right now I'm on a portfolio margin account. So that is why I always say you need to look from your own perspective, not from how much money is being blocked from my side. So for me to sell a put on here for now, it's only blocking 4,400, 4,300 bucks for me. I have a portfolio margin account. Oh, that's the reason. I hope that helps you, Chris. Remember, it's just that the margin that's being held up or the buying power that is being reduced for you to do that trade is less. The risk is not less. Some people, if you are not good in observing the risk on a portfolio, don't think, I'll be foolish to think that my risk on this trade is just $4,000. No. If Neo falls, the now falls down, the risk will be much more. Buying power would also increase. They will also increase this. So kind of when I'm looking at how much, I do take this as a proxy of the amount that is being invested. Okay. You are bearish on Tesla, bullish on Neo. I'm bearish on a Tesla at the price point. I'm not bearish on a Tesla as a company, but just at a price point. There is always a right price at which I'm bullish, and we'll talk about when I'm reviewing the Tesla trade. Yes, you go very wide, convert into a spread. And like I said, on now, if I feel that there might be, volatility will go high because then my buying power, they will increase, I might do a spread, buy a put somewhere to reduce the buying power requirement. All right, so quickly I think one more trade left from a previous week. Then I'll talk about new trades, which includes Tesla. eHealth, I'm still holding it. And thanks to this session, someone brought up this company on our radar. And thank you, whoever brought this up. And I had never tracked this company, but I think when it fell down, someone asked a question, is it a good company to buy? I have no idea. I've never looked into this company. So my answer was, I don't know. But I will go back and look at this company and analyze this. I think this was 2 weeks ago. So the last week I brought this up. I'm saying, I looked at it, why it fell down. Is it a long-term implication? Is it a short-term reaction? I felt it was a short-term reaction. So I opened bullish position, but gave myself room for error, and I'm still holding through this position. I won't mind acquiring this at a cost basis of $67.85. It's making some money for us. We'll hold it. All right, that's all the previous trades. Let's look at the new ones. Tesla. Okay, so we closed the August trade. Did the fact that Tesla is such a big stock, it whole messes up the scale on the graph. All right, so quick, I think Ramesh had a question around Tesla. So Tesla, I sold a call spread because so this is what I would eventually want to do in Tesla. I'm bearish at this price point. So what I had earlier done, I used to sell a call spread, and Tesla will always go against me. It'll always go higher whenever I sell a call spread, and I'll lose money in call spread. So this is, I think, the second, yeah. So from I think what 3 or 4 weeks ago, I'm like, I'm done losing money on Tesla. I'm bearish, but there is a price point at which this bear will become a bull. So then I said, I have to identify that price point and maybe identify, how can I still not lose money even if Tesla continues to go high. So I did that trade. The first one I think did was at 1430 and 1435. And then I looked at a price point at which I will be okay to buy Tesla. And that was an August one. So now I've closed that for profit, which we reviewed earlier. I opened the next one for September. Again, I'm bearish. So Tesla is again, where is Tesla right now? Okay, I'll have to just expand it to expand the scale. So I was bearish when I did this trade. Tesla was around 1440 or something. I gave little room for error, sold a call spread. Right? Then I also looked at what price point I will be okay to buy Tesla. I looked at 900 as a price point at which I would be okay to buy Tesla. And let me now have some fun with this. Okay, so all right, yeah, just right. Okay, let me just adjust this. Okay, all right. So then I looked at what price point would I be okay to own Tesla, and in such a way that the premium I get from these two trades is such that even if Tesla again tells me that I'm horribly wrong in being bearish and goes to 1600, 1700, I don't lose money. I'll make less. It's okay, but I'm not going to lose. So if Tesla goes to infinite, I still make $260. Being bearish, stock going against you, and still making money, oh, I'll take that. But now if Tesla falls, it has to fall all the way 40%. Tesla needs to fall 40% for me to buy it at $900. And I think at that price point, like I said, this bear will turn into bull. I will be all over Tesla in doing a bullish trade at that price point. 1400 price point, 1500 price point, I am not. So that's how the breakdown of this trade. So now if it falls, and it's got time till 11th September, means another month. If it falls down in a month, it falls down to 900 or less, I will buy Tesla at 900. My account size can hold that position. So if this becomes too big, means Tesla becomes the biggest holding, is consuming 70, 80, 50% of your portfolio. Don't do this. For me, it's a big size, but not too big that I need to get worried about it. And I will be able to hold it. So that's why I did this. But if it stays between 1530 and 900, I'll make maximum $760, which I will close this trade when I'm making close to $400. And maybe look to do a similar trade for the next expiration period. So that's a explanation of this trade. Any other question on this one? And I think especially these on the momentum stocks wherein I'm bearish, I now try to find out is there a point at which I'm become bullish, and can I convert this into a no loss if stock goes against me trade? So has been working out good for Tesla. All right, let's move on. So no questions on this. So if it stays between this, I'll close out, because let's say Tesla at 1100, nobody's going to sell to me at 900. Then I will close this trade. Kunal, if that's your question. Then I will close it at 1100. I will close it because nobody's going to sell me at 900. I'll close this. I'll put another trade on Tesla. But if it falls down and get assigned, I don't mind owning it at 900. Waiting, closing before expiration? Yes, because I don't want that where I'm making $700. So I'm not saying that I want to own Tesla 900. I can still make the same profit by doing option trade. What I said, I don't mind owning if I have to own, because when I have to own the shares, it's a more capital intensive. But if I am asked to own at 900, I'm okay. That's why I did this trade. But let's say if it has 1100 and it hits my this profit potential for this trade, I'll close it. I'll add another one. I mean, there's no harm. No one has gone bankrupt by taking profits. Yeah, why not sell a put? Yeah, that's what I've done. But like I said, I sold a put, but overall, I start with my bearish thesis on this one. So when you look at it overall from a delta perspective, I think now it is neutral. But when I did this trade, I was a little bearish on it. If you could just do that, you will have a little less premium. You will have a $5.80 premium. I had a call spread to collect more and to have my thesis that I'm bearish on it. Yeah, you can just sell a put at 90. All right. Any further questions? Cool. Okay, let's look at the next one. JP Morgan. So Tesla was rinse and repeat. Like I said, we did another, earlier we had done a trade in Tesla for August, rinse and repeat. JP Morgan, rinse and repeat on JP Morgan, same trade that what we have done earlier. I sold two puts, one call, net, it's a bullish trade. So right now stock is here, probably making some money or not. If it falls down, I'll be happy owner of it at $91, which is a decent price point for me to own JP Morgan. Okay, they haven't done, financials haven't done much. So $91 is like over here. So I'll be okay to acquire it at $91. If it stays between these two, this option trade will become profitable. Close it, rinse, and repeat. All right, last one for today is Fastly. I said I did some shopping. I shopped on Fastly. Okay, so Fastly, I have, I'm bullish on Fastly. So now the question would be why I sold a call spread, because I picked some Fastly in my retirement account also. So if this blows through the call spread, fine. I'm okay to lose on this individual trade. The retirement cross account trade becomes more profitable. In any case, if it Fastly goes to 100 back to 100, I'm going to lose $95 in option trade. But I own Fastly. If I add my retirement trade in this is how my graph would look like. So, but if it doesn't hit all the way back to 90 by 18 September, but stays between 60 and 90. This option trade will be profitable. If it goes below 60, I am happy to acquire it a little more. So I opened one position in retirement account. Will be happy to acquire it at a lower price point at $55 again if it falls down. So that's my outlook on Fastly. That's why I did this trade. Again, someone asked a question, is it the right time? I don't know. So what I did on retirement account, I went ahead and picked Fastly. It was at 78. I'm like, let me pick it up. Long-term play, goes 5%, 10% down. Don't care. It's my retirement account. Goes high. Don't care. It's a retirement account. Then on my regular trading, I'm like, okay, let's do this call spread and this, because now if I were to acquire more at a 55, would I want to pick more? Yeah, I'll nibble another bit, a bit. Right? Not gonna put everything at 78, but I'm okay to take another bite on Fastly at 55. So that's what this trade will enable me to do. Question, are you bullish on e-health? We talked about it. I'm still holding that trade. And yes, or if your question about the particular ticker, yes. Or for a particular segment, yes. I'm bullish on e-health or telehealth segment as well. All right. Not the deep dive, not the deep dive, but I know what Fastly has done a little different than Akamai. So that's why no, I haven't done that whole deep dive analysis yet. 5G. So we talked about 5G last week, and I think a lot of you expressed the interest that maybe we should do 5G basket analysis. I don't have analysis ready for you upfront. But what I want to share today is the thought process or the path which I'm taking. And I want to invite your feedback. Is this the right way? Should we add something else to look into this? Because we are not talking about an individual company here. We are trying to look at an overall, a big change that is happening in the market. It's like someone saying, can we do an investment thesis on internet? Right. So if it is an individual company, I know what to look for and how to try to analyze it. Now, because have done it for a few times, I kind of are building up that process. This is entirely new. So what I decided, I want to share the thought process with you. Do let me know in terms of some additional feedback on this, and we'll incorporate it and build up our thesis on it. So I don't have a thesis ready right now. What would also help, anyone here working in telecom industry or satellite industry? I don't have much knowledge on this industry. I kind of run away from this thing. If anyone in this group has some working experience in this industry, I'll be obliged if I can collaborate with them and get some help. Again, we help each other. This is one area. This is not where I have huge strength as a technologist. I may be able to understand it, but then there are some things which are, will definitely be helpful if I can find someone who is working or has worked in this industry, telecom or satellite, etc. So do let me know. You can also ping me, send me a message privately if you are involved in this industry. All right. So let me share the framework that I'm putting together. So first, let's get into a little bit of history. And this was also, for me also, like I said, I have never analyzed this industry as such. So We all hear about the terms 1G, 2G, 3G, 4G, 5G. None of them have to do with it. These are not the technical names. These are kind of a marketing names. You can come up with any name what you want to. So 1G was when the mobile phone initially came into existence in 1980s. You could do only voices. But then we realized voice is not enough. I want to send a message, text messaging. We had to invent a new standards on which these telecom infrastructure should operate. That name came out and it was called as 2G around 1990s. Around in 2000s, digital message is not enough. Now we can actually access something called internet that did not exist or wasn't as popular in 80s and 80s probably didn't exist in 90s. It wasn't as pervasive and popular that it became in 2000. So we needed new way, new technologies, new standards. 3G, wherein we started getting phones on which you can browse internet. BlackBerry, iPhone, that changed the world. And then, of course, Android, and then a lot of other copycats. But then we realized that's not enough. We got a Netflix. How do I watch a movie? It's too slow. I want faster mobile band broadband. 4G came in 2008, 2009, 2010. People started rolling it out. I want to watch movies. Now looks like the use cases are expanding beyond. Netflix, Amazon Prime, Hulu, Hotstar, ESPN, that's all okay. How about now my Tesla is connected? My cars could be connected. My home appliances could be connected. I don't have to, come home to cook my dinner. I have an app. I can start my microwave from my app if those all get connected. Lot of applications around augmented reality, which means a lot more bandwidth consumption. We need a new standard. We need a new technology, 5G. So as those use cases have grown, so are the standards. So that's one way to look at the history is use cases. The other way to look at history is speed. 1980s, you're just scrolling, looking at today, right? 1990s, you got 64 kilobytes per second. You're struggling to walk. I'm sure nowadays, if I show this to my kids, they won't even know what this KB is. No, the only thing that they have seen is Mbps or GBs. Dad, what's this KB? What does that even mean? So, but those were the days where, I'd be just ecstatic to see an SMS on my phone. Wow. Somebody can actually write a letter kind of a thing to me, which will arrive me within a few seconds. Great. I don't have to wait for 2 days for USPS to deliver a letter. Somebody can write a message to me. Wow. Then 2 Mbps, 4G, 100 Mbps, 5G will be 10 times faster than what you are experiencing on our phones. Now, with this, a lot more use cases will open up. And this is what International Telecom Unit. So there's a whole, if anyone is interested in learning about future of telecom, I can share this doc in terms of the looked at, what are the different use cases that can appear, what's the growth that they are seeing, network technologies, what are the technological trend, what are the trends on the mobile front happening, what are the different use cases that's been happening, and then a lot more technical details. So I'll spare all that. I won't go into those details, but the gist that we want to take away from that is, now if you have to look at a 5G, the type of a use cases, and the reason why I want to do this, before we dump into the investment thesis, is just trying to build a framework or a base that this whole industry can be analyzed from different angles, right? And I will come to that, but where those different angles come from, where those different lenses come from, is what this could be. So now if you have a 5G, you could be used for self-driving cars, right? It'll make it a reality. Industry automation, it exists today. And companies like Rockwell Automation, companies like Siemens, augmented reality. This is a nascent business. We don't even have it as pervasive right today. Work and play in the cloud, right? We started with the work. I will go to GameStop, buy a game, come back, insert a DVD, or put it into my game console, play it. Phase 2, I don't have to go to GameStop. I don't even know why they have so many stores here. I think it's only for Michael Burry. But anyway, different topic. I don't have to go to GameStop. I can download the game and then I will play. When you have 5G or super speed internet, why do I need to even download it? I'll play game in the cloud. Not that it is not happening. That's a big area in like Twitch from Amazon, where I'm a little bullish on, is one area that which will grow. 3D videos, USD screens. So I think Venu was saying he want to go to theater because he want to watch it on a big screen, high resolution, Bahubali movie. Maybe when this becomes a reality, might stay at a home, just get a bigger projector. By that time, we'll have a 3D projector, and this might work out. Right. Then there are use cases that we haven't even seen. Future IMT. IMT stands for International Mobile. I had somewhere, but all it means, it's a generic term for the different standards that they have seen, 1G, 2G, etc. So there are different standards in the future that I could be working on. Lot more use cases around smart home. We talked about Ring is one. ADT gonna be the next one. Alexa, Echo, Google Home. These things were not even there 10 years ago. And a lot more IoTs and these things will come in. And eventually, if all, it becomes so pervasive that we will see the whole city is getting connected. The future of smart city. Why I need to pay bill? If I've today, why I have to set up an auto pay? Why, machines can't do it themselves? Things like that. If you go to a dispensing machine, that should be able, the dispensing machine, when you go today, you find that, oh, this is not there, it's out of stock. The dispensing machine should be able to sense when it is out of stock, should be able to pay it to the vendor, and vendor should be automatically shipping it so that the things never run out of stock. So you can imagine a scenario where machines are talking to machines. Looks like a sci-fi. So, that future may not be too far away. I think we should be able to see some, some of these things becoming reality within our lives. And maybe I'm hoping many, if you have millennials in this, probably definitely your lives. So now the current standard that's being, okay, I got a question. TNA is on a tier, and I need to pull back next year. What is TNA? Okay, it's what do you say? It's full. It is it looks to be either it's an inverse or is it a leveraged one? Oh, 3x. Yes, we talked right. IWM has been on tier. It is 3x. So I generally do not do leverage because leverage instruments are not for um, to be held. But Dave, you are a full-time trader, so you can do it. I would suggest to someone who is a part-time, and that's why I don't do the leverage, whether it's inverse or regular leverage. I don't deal in leverage products because they will just lose value before you even blink your eye if the stock doesn't cooperate. 5G access, we will. I in our generation, I think, and we'll talk about what's the business tailwinds over there. Bitcoin. So here's the deal. I mean, I had actually done, I think some of them probably are in this group. I can talk about not just a Bitcoin, but I think what would be better is to talk about whole decentralized as an economy. Whether Bitcoin will be there, whether Ethereum will be there, which coin will be there, time will tell. It's the same thing, whether it will be gold or platinum or what will be the value of store. That's a different one. But maybe we can do a session on whole this decentralized economy. What's the move towards decentralization? How it has got a potential to change the way we live, we trade, and we do everything. I see that bigger movement to be as impactful as what internet has done. So I am watching that. I've been watching that for a couple of years. I have positions on crypto coin. But again, my thesis is not just, hey, let's buy Link coin, let's buy Neo coin, it's going up. I'm looking at if I'm analyzing internet in 1985. I see that as an industry in its infancy. It's got a lot more time to catch up. So that's what. Yeah, probably I might talk if there is an interest, I could talk about the whole decentralized economy and what kind of a use cases it would enable. Nobody would have thought in 1990 that we'll be able to stream Netflix movie. It's a reality today. So today, a lot of skepticism that we have around decentralized economy, that could become a reality, right? So I was I wasn't active. I was kind of in school without any access to internet. I did not know what internet is. But now I want to know what the decentralized economy will look like, who are the players in it, what's happening to that before it explodes like internet. So yes, if I see a lot more, people asking for it, maybe someday we can talk about it. All right, back to 5G. So these are, you can ignore, these are some of the standards. So mobile broadband, they're all based on IMT standards. 2000s, they came up with the standard 2000, marketing name was 3G. 2012, they came up with IMT advanced. They'd become 4G. And now the new standards are 2020, which the marketing name would be 5G. Okay. Now someone asked me about what's happening. The progress is the process to develop the standards is in place and is already being agreed in close collaboration. So looks like the standards are in place and now some testings are still going on. Ignore that, lot more technical mumbo jumbo. Let's look at the business tailwinds. Before that, let's look at here. The technologies. So first there are specifications on what is that need to happen, not how. Then there are technologies which will tell how to happen. Now, if anyone is interested in specifications, you can Google it. Those will be all, a lot more details, but the technologies are under preparation. What 5G needs to do, or IMT 2020 specifies, in its future of telecom documentation, there are technologies that companies have been working on, the member states, the companies have been working on, and 193 countries are member, and all the big, infrastructure telecom provider are a member of this union. They have been working on to build a technology that could serve that need. And that need is in a pyramid have been expressed here. This is what we want to have. Now to serve those needs, we need to have technologies. Proposals have been made by several bodies and the member states and are currently evaluation. Member states, this is what is becoming a point of contention. Is US losing a race on setting 5G standards? I didn't see US name in that report. It says member states China and Korea have provided proposals on setting 5G standards, not US. So I think this is where the reality is starting to set in, that if we don't move fast, we won't be the one. So internet standard, US set the standards. Is 5G standards will be set by other states than US? Looks like. Or at least as of now, probably we are not in the on the front seat and leading the standards on 5G. All right, business tailwinds. Some of those accepted standards have been agreed upon. There are some of the proposals are still under evolution. Some are still being accepted. Yes. Ericsson and Nokia with acquisition of leading 5G equipment. Cisco, Juniper also in the race. However, is slower and rolled by service providers. Yeah, so we will talk about it in terms of rollout. And I think there are a lot more other opportunities outside of this. Yes, US banned Huawei since Huawei was leading in 5G. Yep. The idea is that we need to catch up. Banning is fine. We won't let them into our country, but we need to move ahead and fast to set the standards if we want to win the race. Otherwise, we as a country may not be the one which is, maybe leading the future on 5G. Business tailwinds. FCC has adopted the 5G fast plan of Federal Communication Commission, which means it called for modernizing the infrastructure, free up the spectrum to be used for 5G. It means FCC has already adopted that if you are a wireless carrier and we have to roll the 5G, we will free up the spectrum for you. Right? Again, too many entities, government corporations are already investing. So there is a business tailwind behind it. There is a work already happened on the technology front and continue to happen on technology front. Testing is already going on since 2018 in various parts of the world around those 5G technologies. Use cases are being defined. A lot are the use cases that we can't even predict right now. We don't know. We can only think what our imagination can allow us, looking at the capability we have. But if 5G become reality, 1 Gbps become reality, and there could be a lot more use cases. Now let's talk about the framework. Okay, again, we're not talking about the stocks here, though I might mention some names, but I'll have to dig deeper to understand, and that's where I need some help. If someone has worked or has a lot more interest, I've never analyzed this industry, I can take some help. All right, so the way I wanted to start this framework is, let's look at the overall ecosystem, analyze the ecosystem from an ecosystem perspective. One is, which are the companies that will be supplying the core components, right? So if this 1 gigabits 5G become pervasive and this whole smart home stuff need to work, there are a lot more IoT, which is Internet of Things devices that will be commonplace in the market. Today, I can call Ring, it's an Internet of Device. Alexa, it is an Internet of Device. Echo, yes. Google Home, yes. Can I name my whiteboard? There are some whiteboards exist, but those are not heavily used. I can even name a brand which is connected to internet, right? Any of a whiteboard. How about my postal box? Or oh hell, I can't even name a microwave which is connected to internet. So forget those generic use cases. Probably Samsung has a refrigerator, but I think you get the point. So once it becomes so pervasive, there will be billions of internet on things devices. So it says around 75 billion. Each one of them will contain a thingy called semiconductors. And those chips will grow. You will need those as the adoption of use cases that we talked about grows. So one is maybe we look at those core component companies that build those chips. And again, none of them are recommendations. I'm just trying to build and see what are the companies that exist in this space. Then we'll have to filter down which are the strongest ones. Skyworks, Broadcom, Xilinx, modems, Intel, right? Look at the core components. Next comes the devices. Find you have a components that need to go into somewhere, right? What are the devices? Which are the players in the devices, right? Smartphones, definitely that's no brainer. I think we all talk about Apple, Samsung, Huawei. Those all smartphone makers, they will be, moving to 5G. How about some ancillary industries? If you are having an IoT equipment, let's say in an industrial scenario, those equipment need to be protected. They need to have some coverage. Corning Glass is one such company which builds a Gorilla Glass for iPhones. Could they expand beyond to make everything for IoT? What are the other players? Right? Is the glass is that the only player? I mean, could there be others? Of course. Again, we have to build on it. Could there be devices and ancillary industries? Right? What other devices could be there? We talk about smartphones. We can look at wearables. What else? Right? Give me those ideas so that we can expand upon these theses. That's another way to look at infrastructure. I think which Kunal already mentioned, right? This is must have. If you don't have this, all the things about 5G is useless. But the idea is if you have this and you don't have devices that make use of things, still useless. You can make use of the infrastructure. You can, if to have devices, you need to have those core components. So that's why I just want to make sure that everything will be impacted by 5G. It's not one single industry. It's not a company. So we look at that perspective. We look at infrastructure, cell towers. We need mobile carriers, telecom infra, right? Cisco, Ericsson, Nokia, Huawei. Next is because 5G, there will be a lot more data. Then I think even today we are overwhelmed with data. Imagine what will happen if 5G becomes reality and IoT becomes reality. More than 5G, once the IoT become commonplace. Right? Could we see an explosion in REITs, data center REITs? We're already seeing what is happening to digital reality and Equinix. Right? Even with the COVID, just the tailwind from COVID. I don't own any of these. So someone, this is DLTR, digital reality. Oh, this is Dollar Tree. I'm like, that doesn't look like a big tailwind. What's a digital reality? Anyone knows? DLR. Thank you, Sachin. So DLR has seen some good growth from what, almost 60%. Right? Because everyone is connected. We are streaming more stuff. We are watching more movies where everyone is Zoom, everyone is working remote, connected. So a lot more, data flowing. Imagine if IoT become commonplace. So those that which are operating and creating those data centers, Equinox is another one. And I think even Equinox has seen a good growth till now. Okay, so you need physical centers where you can host the servers. Okay, if you are hosting servers, you will also need to have more servers. There are chips that goes in servers. AMD, could this be Dell EMC, because they also provide storage. Can we look at the storage companies? Then lastly is the cloud service providers, right? No brainer. All these neat things, those use cases will be built in cloud. Nowadays, people hardly build anything which I need to go and come in your company and install it, unless there's either proprietary stuff involved, or otherwise you are actually installing a machine. Anything to do with the software is on cloud. So if more and more use cases coming, could there be growth in a cloud service provider, right? Applications. This is what we as a consumer will probably be first exposed at. With connected cars become reality. Will those 1 million robo-taxi dream of Elon Musk come true? Healthcare. Dexcom, Livong, since we talk about Livongo, now it's on Merit, or now it's like it's Teladoc. More and more connected health medical devices. Imagine what all they can expand into. We talked about industrial automation. Rockwell Automation, I think there is another big company, also Brown Boveri, Siemens, all these operate in industrial automation sector. Home automation security. I actually put this before I knew the Google will announce the acquisition. Right? Then talked about machine-to-machine pay, cashless payment. Will the winners be MasterCard, Visa, or will Square branch out into that? And then another application, streaming services. Other ways to look at, because so much data is generated, who is going to win the race for analysis of data? A huge amount of data without insights into is junk. You need to have the tools with which we can analyze the exabytes of data. I won't even say terabytes now. I think it's going to be at a level of exabytes. Will Oracle, still be able to service it? Probably not. Does someone like Alteryx need to come in? If it is on a cloud, is it going to be a Snowflake? Is it going to be Splunk? Splunk is actually more of a logs. But yeah, I mean, they do data, so I'll give that. So yeah, petabytes. Okay, I skipped that one. Petabytes, even today we talk in petabytes term. When we talk to clients, we tell them, 5 petabytes will charge you so much increase, then we'll charge them. So will there be new winners that will emerge from it? Right? And while I was talking about this, and now suddenly I realize we need one more over here is CDN providers. Again, those are kind of infrastructure. So that's the beauty of having a community, right? Is Fastly going to be the next CDN? Or it's going to be Akamai? Or it's going to be Cloudflare? Who's going to win? Because to have the content, to achieve the speed that we need to make sure to go to these use cases, content is available at edge. So means if I have a server which is in US and I'm a person sitting in Malaysia trying to access, if the request has to come to the servers in US, not going to work out. Needs to be serviced somewhere locally in Malaysia. That's where the CDN providers come in. Who's going to win that race? Akamai has been the most, I would say, recognized name, but now not a lot of new players like Fastly and Cloudflare have been taking share from Akamai because maybe they haven't restructured. And again, I have not done analysis of what's pros and cons of these three companies, but I'm just thinking something need to change. The old way of caching the content would not work. Sorry, I'm to talk little technical terms here because this is a technical topic. 5G, I don't think I can have to I can get away with that. But if you do not understand anything, just ping me. I'll try to talk in as much as a common person that as I could. So this is could be another way. So this is one framework, and probably I'll have to add a little more on this to see what we can do. Other one to analyze it, what do I seek money from it, right? I can tell you, go and invest in on 5G. This particular company is going to ride the wave of 5G, but that company's business model is in infancy. So if you want to generate the your timer as it is short, that doesn't work out for you. Or if you are looking to have a consistent income, then you should look at something which will give you consistent income, right? Maybe if we talked about REITs, digital reality, maybe then for you, if you're in this category, digital reality and Equinix may be the better bets for you. But if you are here, maybe I look at Fastly. I might look at which are some of the other things we talked about. Some growing companies on the cashless payment. But if I'm looking for a dividend regular income, I'll probably pick Verizon. I'll pick digital reality, maybe pick American Tower because they give it. So that would be the another framework. And then for us to make an individual decision, we need to marry both, right? If I am looking here, which companies should we pick from here? If I am here, the list of companies could be very different. Right? So that's a framework which I'm thinking is how we should build upon. And that's what we'll need some more time to build upon this. And then we can talk about, which one, what companies do and which one we should look at. Otherwise, an easy answer for me, if you don't want to do, some homework or dig deeper to figure out which are 5, 10, 15 companies we should keep on our radar, maybe go buy ETF. This is one ETF, SNSR, which has got investments in Dexcom, ADT, Alarm, STM, Skyworks. So, or there is another ETF which available is, now this focus on the real estate. So if you want regular income and you want to pick an ETF, maybe you can look at this one because this is invested in Equinix, American Tower, Crown Castle. All those they provide infrastructure, real estate infrastructure for essentially the data management or data storage. So we'll benefit from there. So these are the two ETFs. Maybe we can start positions in these while we are figuring out which are the companies that could become next Amazon of 5G. So again, the work has just started. We'll continue to build on this and add to it, and I will share in terms of what I learned. And I would request all your help. I say from data security, absolutely. It's already become a huge, I think, a thorn between what's happening currently on US and China. It's all related to data security, right? Could it be CrowdStrike? When I talk about it, few names come to my mind. Could it be CrowdStrike? Could it be Fortinet? Could it be Qualys? Could it be Palo Alto Networks, etc., etc. Checkpoint. Yeah. Now the idea is not, is everyone gonna ride 5G? We don't know. So then next would be, once we have this ecosystem list, then we identify which are the few, top 2, 3 players in that, and that become our short list to, to put it and say, okay, now I want to start investing portion by portion, slowly on those ones. So that's, I think, eventually what we should end up in. So we'll see. A lot more work to be done here.